You got me running, got me running. Shake it, shake it, shake it, shake it. Raise your hands up. Raise them up.
Okay, good day everybody. Welcome to the Forex Trading Asia Daily Currency Call. So this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. So this currency analysis is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. Okay, so yesterday night we had the BOC monetary policy decision released. So today we have Kim Hong here, currency analyst at LCMS Traders, to summarize what happened to the monetary policy decision yesterday. Kim Hong.
All right, BOC. Yes, I get very excited when I talk about monetary policy. Okay, so what happened last night was that the Bank of Canada held rate unchanged at 0.25% as expected. Now, the difference is that this time round, they actually adjusted their weekly assets purchase, okay, from the previous $4 billion to a lower of $3 billion. Okay, so what this means is that they are cutting back on their stimulus, okay, their monetary stimulus. Why is that the case? Because if you guys realize that the Canadian economic data releases for the past 2 months has actually been very good, okay, employment has been rising like nobody's business. So the Bank of Canada actually concluded that Q1 growth was actually stronger than expected. Okay, so which explains why they are actually cutting back on their assets purchase right now. So this actually led to the strengthening of the Canadian dollar across the board. Okay, across the board meaning against all the other major currencies. And okay, so the short-term impact would be, of course, the strengthening in the Canadian dollar. However, the BOC also warned that the impact of new lockdowns. Okay, so recently Ontario actually went on a lockdown, a short lockdown because of new cases. So the Bank of Canada actually warned that, the impacts from all these new lockdowns may actually have a negative effect on future economic data releases. But that would be, in the longer horizon kind of things. So the Bank of Canada actually says that rates will be held unchanged until 2% inflation is sustainably achieved. So sustainably achieved, what does that mean? Okay, it actually means that inflation need to be at the 2% mark or higher for an extended period of time. It is no longer the case whereby, inflation hits 2% this month and guess what? We are looking to increase interest rate. Now it's the case whereby we need interest rate to be above that level for, I don't know, maybe 6 months or even 1 year before the central bank will consider increasing interest rate. So the central bank actually expect this to happen around the second half of 2022. So we realized that this is actually earlier than many of the other central banks, like the US, which actually expects this to happen maybe around 2024 earliest. So this good prediction from the central bank, this good expectation, I would say, from the central bank, the Bank of Canada, actually helps in the hawkish view actually helps in the strengthening of Canadian dollar. So if you realize that dollar CAD last night actually plunged by around 150 pips, which is quite a lot, given that there hasn't been much strong movements in the market recently.
Okay, thanks for that, Kim Hong. Thanks for that, Kim Hong. quite a comprehensive breakdown on the monetary policy decision yesterday. Okay, so we have Scott here today too, Scott Andrews from the Forex Briefcase Australia team, to share a little bit about the dollar index. Scott.
All right, thank you for that. And thank you, Jim, for your detailed analysis as well. So look, just touching upon what happened overnight. So we did see the US dollar. It didn't quite hit 91.50 as well. I did discuss that as a point to monitor as well, and it didn't quite hit that. So we're at 91.04 currently. And I did put in an article on Forex Trading Asia as well in regards to where I'd like to see this go. It didn't quite hit it. I didn't take a trade on it. And in those cases, you can sometimes be a little frustrated. And I would say just, don't get too frustrated. There's going to be more opportunities. We'll see what it wants to do now. So we're at the next level really to pay attention to would probably be, 90.9 or so. So we do have a little bit of room to go. So I would leave it for now. It's quite interesting to see what's happening with, the US dollar when it gets to that point. And then if we break through 90 cents, then we could really see some extensive downside. So it's going to be one of those things where today it's just pretty subdued price action. Gold, I would have liked to see something happen there. And you're probably wondering, why does it make sense that you monitor these things? And what I would say is that the US dollar really drives a lot of things. If we see a lot of weakness there, we see gold moving higher typically. You might even be trading on the ASX, you might be trading gold stocks. So this sort of thing that we offer here is, gives insights into other things, related to the overall market as well. So being informed about this is quite important. No matter what you're doing, really, is how I approach it. So if I'm trading the ASX, I'm trading the US markets with equities, I'll have a look at the FX markets to see what's going on, to get a whole picture of things before just sort of jumping in under impulse. So I'd say that's why all this is relevant in understanding what's going on in the markets as well. So those are my thoughts.
Okay, Scott, so are you looking at a more towards a downward movement on the US dollar moving ahead, or what are your thoughts on the movement?
I would say yes. So tentatively, I'd like to see it test that next support level, which is 90.9 or so. And then I'll say if it does break through that and goes lower, then I'll say I'm definitely short bias. Right now, if I have to choose, I'd say I'm slightly downwards because we see it, moving lower as the session is playing out. So I do see a downward, continued movement here of the US index.
Okay, thank you so much, Scott, for the analysis on dollar index. So today's currency in focus is yen and gold, and we are with Jin Dao Tai, founder of LCMS Traders, a multi-million-dollar trader trading an account with more than US $14 million on a daily basis. So Jin, passing it to you for the currency call for yen and gold.
All right, good morning, everyone. So we had a massive night last night with the Canadian Bank of Canada's decision to reduce the QE program to 3 billion per week, like Kim Hong was sharing already. That moved the market not just on the US CAD, but we've seen, like what Scott was just sharing, we've seen that dollar weakness being applied pretty much across the board, across the major currency pairs. So looking at the yen pairs and gold this morning, first thing we do, look at the news, forextradingasia.com, looking at the economic calendar there. We are scrolling through, it is Thursday. Not a lot of news happening specifically for the yen, but we do have tonight at 7:45 GMT plus 8 Singapore time, the ECB interest rate decision being released. The deposit facility rate is going to hold at minus 0.5%. We don't expect any changes to be applied there, but the focus is going to come towards the monetary policy statement. What is the ECB going to come out and say about their current situation? My view is that it looks like there's going to be not a lot of changes. They might actually be a bit more consistent with their approach. So we might actually, through this non-changing of facility rates, this monetary policy statement being similar or having a consistent approach, we might see some strength come around for the euro dollar, which will probably translate to the euro yen. I'll show you more about that shortly. Remember, the press conference is also going to follow these decisions and the release at 8:30. So pay attention to the press conference with questions coming from the media that might actually bring a little bit more volatility to the euro dollar and also the euro yen there, with the US existing home sales coming out. Not a big change in terms of data. Was 6.22 mil, expected 6.19. Not a big change. So I don't think this is going to change too much on the US dollar front. On Friday, early Friday, we have CPI numbers coming from Japan, but you can see that this is not going to move the yen too much. It doesn't have that historical impact, so I don't think this is going to move the yen too much at this point. We have the euro numbers, which we spoke about, the pound numbers, which we spoke about already. And then on Friday night at 9:45 p.m., manufacturing PMIs coming from the US was 59.1, expected 60.5. So going well into that expansionary phase. The services PMI was 60.4, expected 61.9. Again, very good numbers expected from the US in terms of PMI. This might actually give a little bit of a footing for the US dollar. It might halt the drop for the next couple of days, or it might slow the drop, maybe not halt, but slow the drop in the US dollar for the next couple of days. A whole bunch of news next week, but we'll get through that as we come along next week. At this point right now, how does this all translate in the charts? Looking at the US yen here on the H4 time frame, we've seen early this week it's dropped to that 108.22 level or 108 level. I'll move that down a little bit to say 108 level, sitting at this point as a very good support, with the expectation of the dollar going to be weaker, slightly weaker, with the anticipation that we might see, move away from the US dollar with that weakness and probably a little bit into reserve. What we could anticipate to see here on the US yen will be that continuation of that trend lower. The continuation of the trend of that move lower from 108, maybe even towards 107. So what you're looking for at this point is for a further move downwards below 108. Let it break 108, maybe 107.80, 107.85. You'd have an easy 30 pip, 40 pip stop loss for a very good 70 to 80 pip take profit level. Even if you're able to take a 40 pip stop loss with an 80 pip take profit level for a trending trade, 1:2 risk reward ratio trade, this could be quite attractive, but you will need to be a little bit more patient. Let it break lower, let it close below 107.85 before getting into that trade. Relatively straightforward on the US yen, a bit more to wait for before jumping into that trade. The euro yen, on the other hand, we've seen that, we spoke about this last night, where it's reacting over the past couple of weeks at this 129.77 level. We saw it happen in early April, we saw it react in mid-April, and we see it now towards the end of April, reacting off this 127.75 interim support level. Right now, the euro yen has bounced up, heading towards the 130.28 level. At this point, with the ECB news coming out later tonight or in the evenings, what I'm looking for is for the euro dollar to move higher, which could drag the euro yen further up. But don't enter a trade unless it breaks above 130.28. If it breaks above 130.28, then you could be looking for a short term, a quick trade, say about 130.40, you're looking at a 20 pip stop loss for a good 60 pip take profit level. With the news dragging it higher or pulling it higher, with a possible stronger euro dollar pulling it higher, if it breaks that 130.28 resistance level, then you're looking at a 20 pip stop loss, 60 pip take profit level, 1:3 risk reward ratio towards the upside. And here we get back to the pound yen. Pound yen, I've been talking about it, saying that it was likely to stay within the 150.82 and the 149.76 range. It came strongly back into that range. Right now, it looks like, again, it's trying to break upwards. When we last spoke about this, I said that it was sitting in that tight range, waiting to break out of consolidation. Very quickly, it broke out of 150.28 towards that 152.26 resistance level. I'm looking again for a repeat of this scenario. So looking for it to break 150.28 to move towards 152.26. In terms of a trade, look for it to close above 150.95. Easy 30 pip stop loss for a good 120 pip take profit level. 1:4 risk reward ratio, but don't expect it to hit that 152.26 in a hurry. What I might actually think is that anywhere in between these points, because you have a 1:4 risk reward ratio, you're able to take advantage of that profit margin there to close out a trade early if the prices do react accordingly. And lucky last, looking at gold. Previously, when we spoke about it, anticipation was for gold to drop back towards the 1682 level. Hasn't done that. It's broken above 1773. At this point, I think we might see some consolidation for gold. I think we might not see it head towards 1845. I think we'll see a bit of consolidation, sit across, ranging between 1795 and 1773, within this range before possibly heading higher. So probably not too much to do on gold at this point, but if you're trading gold or if you're investing in gold, look for that buying opportunity, take advantage of the consolidation for future moves higher.
Okay, thank you, Jin, for the analysis. So again, guys, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. Okay, so yesterday night, I attended the weekly Wednesday live trading session with LCMS traders. So I find it that it will be very beneficial to traders that are currently learning or struggling, or even you need to trade ideas from time to time. So I'm going to get Daniel here, trading coach at LCMS Traders, to share a little bit about how they help traders trade better. Daniel.
Hey, thank you, Jinwei. So yes, you're right. So usually I get a lot of comments about no time to trade. I don't know what to do. I come home late, not really sure what to do. That's not true. So because I will show it to you. Yes, you're right. Yesterday was really exciting. Every Wednesday evening, 8 p.m. we have a live trading sessions together with the club members. We show the members on how to prepare what possible trades to take, know what you're doing. Basically we're doing the 5 steps analysis of the LCMS Traders Club. We do not need you, so you don't really need to be on the computer the whole day, but select the time, and with only 1 or 2 hours, which we showed yesterday, 8 p.m. to 9 p.m., you definitely can make profitable trades. Now, yesterday night was really exciting. I mean, Kim Hong, Jin has already mentioned about the US CAD, the Canadian news. We had the core CPI data. We had the Bank of Canada's rate statement, policy interest rates. And of course, we have the press conference coming in. Now, we did an analysis then. So I'll share my charts right now. And you can see we did the analysis. I mean, we look at a 1 hour, 15-minute chart. And what we looked was, there is a CPI data coming in. We do expect it to be 0.6 or 0.7, which is better than the forecast number. And then, however, we do know that the monetary policy statements is coming in, so we do expect no change. And if it's going to be very hawkish statement, that's what we mentioned. We expect CAD to strengthen coming down. So looking at all this data, we were guiding the trade members, coaching them and how to expect what to see. And actually it did what happened. And the core CPI, the CPI data we didn't do better than forecast. That's why it went up slightly a little towards still going into my resistance zones. And then I expected when we prepare the members for the core statements, for the monetary statements itself, it did as expected, no change, and it was a very hawkish statement. It came down very much, drops a ton right there. I mean, the reasons Kim Hong has already mentioned. However, we were saying watch out for the COVID-19 lockdown, but very hawkish statements coming in. The Canadian yen strengthened and coming down. So a lot of members who attended last night already been prepared and made money there. Now, not only that, we also were looking at a possible trade here at a pound USD on a 15-minute chart. We did that, and we were looking at if it goes past below this level at 1.39000 or 1.3906 coming in, we could possibly take a trade, and we did that. The pound USD, we took a trade, and it came all the way down to almost 20 pips. However, and with those who have, especially the club members who have known the 5 steps, we know where to exit out of Bollinger Band so far away, get it out, and that's where a lot of members actually followed the idea, the trade exit plan, and exit out and secure the profits last night. We just within 15 minutes or so, they already secured 20 pips. So this is really how we've shown, and especially if you are the LCMS Traders Club, we actually get coached and you learn how to make profitable trades very well in just 1 or 2 hours. But Junwei, I just like to hijack a little bit here. We are having the 4-day FX Kickstarter in. The part 1 is already over on Tuesday. We're going to have tonight part 2, right, at 7 p.m. to 10 p.m. GMT plus 8 Singapore time. So what we are going to be discussing is the technical analysis, on how you can incorporate into your trade analysis for a better timing market, that's what we did yesterday. And when we're going to show you how we combine both strengths of the technical analysis and the fundamental analysis, which we did on Tuesday, into a simple 5-step checklist to find reliable trade entries. Entries. So don't miss this chance. If you are, the link will be pasted up on the 4-day course, lcms.com.sg. Sign it up, and if you have friends and families who are also trading, ask them to join. It's free. Most importantly, it is free. So don't miss it out and sign up. You're going to be very beneficial. And this is the proof is shown yesterday that how we made money just on the 1 hour live trading sessions. Okay, Jinwei, thank you for letting me hijack your this part.
It's okay, Daniel. Yeah, I mean, any of these free courses will be beneficial to our listeners. Okay, so we have come to the end of the session today. We will see you guys tomorrow morning again for the Canadian dollar and cryptocurrency analysis. So see you guys tomorrow. Goodbye.